Mr. Ben Wolff, welcome to the podcast. How are you, my friend?
I'm doing well. Thanks for having me on, Brian. Appreciate it.
Excited to have an experience here, if you will.
Yes.
So I want to hit you with a statement. I want you to talk me through it because this is not a traditional podcast episode where we're talking about buying an Airbnb and then another Airbnb next year and using the revenue snowball to build a hospitality portfolio. Talk to me about the process of turning a treehouse into a $29 million business. Like, what happened and how did this go?
Yeah, there's a little more to the story than one treehouse into a $29 million business. I actually started in commodity Airbnbs, more of like single family homes. And I built up a management company from 8 units to 200. Most of our inventory was urban, so it was city property. And then when COVID hit, that business dried up overnight, basically, at least for a couple months. And that's really what pushed me into doing something more experiential, a little more aspirational, and what became my first treehouse hotel, Onera. It was during COVID. I had just gotten off a road trip with my wife. So for our honeymoon, we did a Southwestern US road trip. We hit like a dozen national parks over a 10-week period, did RV life. I mean, the whole thing was a blast, but the RV gaffes, like the DPF filter going out and my boots flying out of the side compartment in the middle of the highway, like all that stuff we could do without. So the Onera idea was, how do we remove that friction from the experience and still provide these like amazing, perfect moments in nature? And then the kicker to that was, let's make these stays super one of a kind and inspirational. And so the unit itself accentuates the landscape and is a highlight in and of itself and a real draw. So that was the idea behind Onera. Fast forward, somehow we did it in under a year, which I would never do again. It was like trial by fire. I'd never built anything, but we found the land in December 2021. Found the land in December 2020 and opened in November of 2021 with 8 units. Yeah. So we had 2 custom treehouse units that have become kind of insta-famous and a number of other unique stays. Safari tent style unit, a dome, a cocoon tent, a couple container homes. So a wide variety. We had an Airstream at one point. I think that's gotten a little bit played out. So we actually shifted that to something cooler. But yeah, that's how it started. And I took the leap, right, of building and developing something ground up that was, I think, picture made for the modern traveler that wants experiential. They want something one of a kind. They want a story, right? They want to feel connected to a unique property and not just like a soulless box, whether that's a commodity Airbnb or a Hilton, Marriott, whatever, just standard room. So we wanted to break that mold. And yeah, the Onera property, the first property allowed us to do that. We opened in November 2021, and due to COVID, I think partially, and also just having an amazing product, we had amazing success out the gate. Now, I will say early on, we were only on OTAs because that's what I knew, like pretty much exclusively Airbnb. And we were doing really well on Airbnb, like $500 to $600 a night, occupancies, in the high 80s, even over 90% for some of our units. We were happy, things were going well. And in, I think, January or February of 22, we had a travel creator, an influencer, reach out on Airbnb and say, hey, I'd like to come out and do a collab post with you guys, show off your property to my audience. And I was not hip to this game. I was not even using Instagram much at all at this time. But I was like, yeah, it's worth a try. Let's like give it a shot. So we had her come out. We spun up a direct booking site, and she did about $30,000 in direct bookings for us over 2 posts that were free. Like we didn't even pay her anything. It was come out, shoot content, do the post. So that got me hooked.
And now the company's named after her.
Yeah, exactly, right? But no, that got me hooked. And so from there, ended up leaning into influencer marketing. So for the rest of that year, we took all influencer inbound. I asked for any influencers that came to give us referrals. And we did about 30% direct just off of influencer marketing. We didn't have any of our own content. We didn't have any video. It was just photos, same as the listing photos that I would post once in a while. And it was really in that next year of 2023 that I was like, let's double down on this. Let's really try and invest in our own content and try and take this to the next level. So that's the year. Tried to hire a social media agency. That didn't go great.
What? There's a social media agency that didn't work out well for you?
I know, total shocker. And specifically in the hotel space, social media agencies, like the whole ecosystem is basically just have an account, respond to comments and DMs, make posts, engagement super low. the whole account looks like one big TV commercial, right? It's not engaging. There's no storytelling, and they're not putting the content first. It's like managing the account is somehow important, but it's like all about the content. So they're not baking really high quality content into their offering. They were sending like a lower level employee with an iPhone once a quarter to get content at our property, and that's just not going to cut it. So a few months into that, we weren't growing at all, weren't really seeing any results. All of our videos were getting very low engagement. So basically me and my business partner in what became Awasi, which is our services company that does social media marketing now and does revenue management and property management for experiential properties and bigger resorts now too. My co-founder in that and myself basically decided, let's set up a team to do this ourselves. So we hired videographers, creative associates, and we built out this whole social media marketing engine and content machine for our properties. And now we offer that to other hotels and experiential properties. Yeah. I mean, there's a bunch of other things we can go into along the journey, but
I mean, I think that's the podcast right there. No, there's so many different rabbit holes that I want to enter with you right now. The first is, I believe that one of the largest and most impactful statements that you just made there is experiential and outdoor and unique stays, like boutique stays. I 1000% see this as a wave that's going forward in the next 10 years. And we're seeing large companies like Marriott just purchase the postcard. What was it?
Postcard cabins. Yeah, it used to be Getaway. I mean, they were one of the first movers in the space.
Yeah. And then what was that? Do you know what that it was like for multi 8 figures, 9 figures, wasn't it?
It was hundreds of millions. Yeah. I don't remember exactly what the number was, but I think it was north of 200 million. And I'm pretty sure that was just the brand, right? I don't know if that was all the real estate. I mean, Marriott's asset light, so I'm pretty sure it was just the brand.
Which is another whole rabbit hole to go down. And then you had an exit as well with these properties to Summit Hotel Group. Walk us through that really quickly, just to cement this process for people, because I think that a huge area of opportunity for the listener and for the watcher is to be building up these really cool, unique stay portfolios, and then either go the direction that you want to go, which is just building a really high quality experience, but also private equity and these hotel groups, like this is where they're wanting to go, and they don't have the resources or infrastructure to go build this like grassroots kind of style portfolio. And so walk us through the journey. Like, so you had an exit as well.
100%. Yeah. We had an institutional exit, which was phenomenal. One of the first in the space, like for a landscape hotel to sell to a public REIT. I'm pretty sure we were the first one to do that. And especially at an 8-unit property, ultimately 11 units when we sold to them, that was quite atypical. But they saw it as a way to get into this experiential hospitality world and expand the platform. So we are now expanding the Onera Fredericksburg property, our first location, from 12 keys now to 35 opening this summer. And we have a bunch of very new, exciting unit types. And we have a second location that we just opened in Wimberley that the REIT also helped us finance. And we're looking at other locations. So they saw it as a platform play. Otherwise, a $7 million exit, which is what it was, is a drop in the bucket to a $4 billion REIT. But, you know, they saw the expansion potential. And I think they see what you're saying and what a lot of people are seeing. This is where the puck is going. This is what the modern traveler wants. They don't want the cookie cutter boxes anymore. The big hotel flags and brands are consistently losing the leisure travel segment and share. They still do well with corporate, right? They still do well with the group bookings, but leisure is not interested in staying in a Marriott or a Hilton or a Sonder when that was a thing, like just a cookie cutter Airbnb or a cookie cutter hotel. They want something that feels authentic and experiential and unique. And there's going to be a story when they leave about that property. And I just think that the way that the big brands and institutional investors are trying to go about playing in that space is acquiring, right? Acquisition. So the big brands are acquiring boutique independent brands that are tapping into this experiential movement. Remains to be seen if they dilute that brand or if they can actually make it work long term. And then some of these REITs and institutional investors are seeing the crazy return profile of these experiential assets, and they want to get a piece of that action.
Can you define for the listener and watcher the difference between a traditional property and a boutique property?
Sure.
Because it's a gray area.
And you're talking like hotels?
For a hotel,
yeah. So I look at it as more traditional, often called like big box or a flagged hotel. And there's a lot of nuance here, right? Because the big brands, Hilton, Marriott, Hyatt, they all have these soft brands and collections of hotels now that feel more boutiquey and independent, like the Autograph Collection or Marriott Design Hotels, small luxury hotels, right? There's these collections that are soft branded. So that's a tweener. So that's in the middle. You have your big box hotels, like your big multi-hundred room Marriott's, Hilton's. It's the same box if you're in Texas or Thailand, right? You like couldn't really tell the difference. And they're all about conformity, uniformity, right? Brand consistency and brand standards.
Economies of scale.
Economies of scale largely, and efficiency in operations, right? And I think a consistent experience for the guest, which is important. And I think that's one area that experiential stays still have some work to do, providing that consistent experience that a guest can count on and trust. But we can get into more of that.
Yeah, I want to go really quickly. I want to come back to the journey of you being an Airbnb investor and then making the jump into, was this a commercial loan to develop this ground up for the?
Yeah, it was a ground up commercial construction loan.
Okay, so that's a massive jump to make from a financial perspective, from a capital raising perspective, from a mindset perspective. I want to talk about all of that. But first, let's drive the nail in the coffin here. Is this the death of Airbnb? Seriously.
Yeah, so I think that Airbnb, I was actually just talking about this yesterday. I think that Airbnb will persist and continue in a lot of ways. They are investing heavily in AI. They're investing heavily in personalization. I do think that like the guest experience is strong on Airbnb relative to like other platforms. So I do think they'll persist. And for the certain type of travel, if you are looking for certain amenities, if you're trying to do some value shopping, searching for something for your family or a bigger group, Airbnb can really serve a great purpose. But if you want to get inspired, if you're looking for your next exciting leisure travel destination, I truly believe that Instagram and social media platforms in general are going to overtake OTAs as a better shopping and discovery experience for future travel destinations. So that's where we're trying to be. We're trying to create products that are picture made for shareability, for Instagrammability, right? And then put out good content for people to find us.
Yeah, I think there's two use cases that can be made here. So the first is that we see this massive wave in COVID where everybody was purchasing Airbnbs or pre-COVID and they were making just money hand over fist.
Yeah.
You buy a box, you're able to cash flow $3,000 to $4,000 a month. And now everybody did that. We're coming on the other side of this wave in 2025 now to where you have local municipalities that are cracking down because of affordable housing, and those short-term rentals drove the prices up, right? You have now a flood on the market of subpar to average properties, where now if your property is good, I would actually constitute it as average. You need to have the crazy mural, the crazy wall art, the Instagrammable moment for your property to stand out on Airbnb to get any listings or bookings or front page whatsoever. So there's that. And then also the kind of exodus from the OTAs to direct bookings. So I think that's a massive opportunity. Can you describe to the listener why that matters? Because they may not understand or even know that there's a possibility for them to have revenue outside of listing their property on Airbnb.
Yeah, I want to delve into something you said there because I think it's important. And that is that the OTAs, their goal is to provide the guest experience, the best experience possible for the guest. So what that means is uniformity of listings, very easy to sort. You just become one of many, right? It's very hard to stand out as an Airbnb operator on the platform. And it's basically a race to the bottom, effectively, in terms of pricing. So your margin continues to get squeezed. The guest gets more value. Airbnb inherently gets more value, more eyeballs on the platform. So that's the struggle for hosts. And what everybody's after, because they see the value in it, is how do we drive direct bookings? How do we drive bookings off the OTA platforms? And I believe that Instagram is the best way if you have a property that is experiential, unique, has a shareable.
Let's double click on that
Yeah.
really quickly because somebody may be listening to this and they don't understand the economic benefit. So what fees are you paying through an OTA like Airbnb or Booking.com that you would not be paying if you're direct?
Yeah, and there's multiple benefits. So we'll touch on that one first. So there's benefits for both the host, and I actually think there's benefits for the guest. So on the host side, OTA fee savings, that's the obvious one, right? So you're paying Airbnb, call it 15%, somewhere in that ballpark. Sometimes it's more. Booking.com, you might be paying 30%. Expedia, same thing. So massive fees. On our direct booking website, we're not pricing any lower. We're pricing the same as we are on the OTAs, like when you're including the full fee. And we're basically just scooping all that margin, less payment processing fees. So we're saving anywhere from, call it 13% upwards of 25% in OTA fee savings when we're driving
Insane.
bookings direct. Yeah.
Insane.
Yeah. So it's very compelling from that standpoint. You also own the customer journey from beginning to end, right? They first see your content, then they go into your funnel. Maybe they join your newsletter. They're following along in the journey, and then ultimately they decide to book at some point. And then you can retarget them later on because you own all the data. Airbnb doesn't own the data at that point.
I didn't even think of that.
Yep. So there's that piece of it too, and you control the whole experience, right? From beginning to end. So that's really important. Now, the third one that I don't think almost anybody knows or would think of, our ADRs, so our average nightly rate direct, is higher than it is on Airbnb and other OTAs, often as much as 25% higher. Now, I said we're pricing the same, so how can that be? It's because the Instagram shopper is less price sensitive. They don't care about the price. They're emotionally triggered, right? They are inspired to book. They're not value shopping. They're not using the same part of their brain that they would be on an OTA.
Not apples to apples.
No, where they're like, I want the best bang for my buck. I'm trying to get the most value. They see the treehouse on Instagram or the 4-star resort on the California coastline, and we work with some of those, and they're like, this is amazing. I want to stay there. And when they go to your website, whether it's $500 a night or $725 a night, doesn't really matter that much if they have the means to pay, right? They're not anchored to this like value shopping relationship. So yeah, we see a higher rates direct. It's because they're less price sensitive. They're booking higher demand days, farther out, and just higher value bookings.
So what was the overall cost savings there between all the different booking fees and everything just alone?
So the OTA fee savings are anywhere from 13% to 25%, depending on the platform. So for like Expedia and Booking.com, you're in the mid 20s because those fees are like 30%. Airbnb, it's closer to 15 to 17%. So when you factor in payment processing, which you have to have direct booking as well, it gets down to 13, 14%. Still huge.
So that's like a 20% net profit swing just from that one piece of advice right there, just about.
At least, probably mid 20s. I mean, our properties are over 50% NOI, like 55%.
That's absolutely insane.
Yeah.
Now, from this piece of advice, I think that probably doing both strategies probably makes sense. Do you guys still have them on the OTAs?
100%. Yeah. You want as many eyeballs as you can. Sometimes like the OTAs can help you fill in lower demand days, right?
So play both fields.
Yeah, totally. We're about 80-20, 80% direct, 20% OTA.
It's funny that we're talking about this right now because I actually had the CEO of Booking.com, the founder, Jeff Hoffman, on the show. Sorry, Jeff, but he actually wouldn't care. He would actually, I think, side with you on this because he's very far removed from this. He just did it. He built Booking.com because he enjoyed travel and he made his money from doing like the airport self-check-in kiosks.
Oh, okay.
Yeah, so that's where he made his original money. He's a very cool dude.
Nice.
I want to talk really quickly. So we're talking about this net profit, and if somebody goes and takes the advice that you just gave them right now on their short-term rental, their Airbnb, they can maybe make 20% more, right? And that's cool. That's cool. But there's a whole new world, like enter Aladdin here, where they can increase their net worth by millions of dollars in the commercial space. And so where I'm screaming from the mountaintop is, hey, all you guys that are enjoying this whole Airbnb guest experience, just take a slight pivot over into commercial, into boutique, or doing something like you did. And then the extra $100,000 of net profit goes into a cap rate. And now we have a valuation to millions of dollars for the business. So walk us through like the mental, economic, financial decision of going from your short-term rentals to saying, okay, let's do this 8-unit here in Fredericksburg. We're going vertical, baby, put it in the trees. Walk us through that from a decision-making to go from that doing the traditional single-family route to commercial.
Look, I mean, I'm an entrepreneur. I'm an optimist at the end of the day. I feel like to be a strong entrepreneur, you need to be an optimist. If you're a pessimist, you're just not going to make it.
Pessimists get to be right. Optimists get to be rich.
Exactly. Yeah, you nailed it. I think there's a piece of that. I had a passion for creating something like this, right? I had just re-fallen in love with the great outdoors on this road trip. I was getting sick of commodity Airbnbs. We were getting squeezed. COVID kind of was like the death knell for our city short-term rental business. And so I got pushed into doing something new. Yeah, development and construction was a little scary. I didn't know anything about it. It's a jump, but I was like, I'll figure it out. I'll learn on the fly. Worst case scenario, something goes wrong, I'll figure out a way to make it right and ultimately still get open. And there was plenty of things that went wrong along the way. To your point, one thing I realized that I try to tell a lot of Airbnb operators out there today is that if you're managing, let's say you're managing like 50 properties across 10 different markets or something like that, which I manage 200 properties across a dozen markets. managing like a few hotels is actually a lot easier, and you might make the same amount of money as trying to manage all these different markets, different vendors, these unique different properties, all with their own access situation and amenities. And
same with multifamily.
yeah, it's all totally bespoke and different when it comes to individual Airbnbs. So multifamily hotels really give you that operation scale and ease of scaling in general that it's hard to do on the individual Airbnb side of things.
Yeah, I want to add something to that really quickly, because this is a really excellent pro tip for people that are listening that may be in multifamily or in a different commercial sphere. To your point, economies of scale crush, and a lot of property management companies don't want to manage like 10 units or less, especially in multifamily. So what I've seen friends of mine do recently that has been like a game changer is what they're doing is they'll be an operator that maybe they have 20, 30 units in a geographic location in a zip code. And then maybe down in the other side of the city, they have a friend or they have somebody else and maybe even a competitor that has another 30 to 50 units. They're joining forces with them and saying, hey, let's go together to this property management company and give them a portfolio of 70 units. And that way they get economies of scale and they get somebody that's a seasoned operator to come in, and then they both benefit and split the costs. And I've seen people with direct competitors, they're like, this is amazing. To that point.
And that speaks to another point that I've harped on recently and really feel like I've come to believe. You get bigger projects, bigger opportunities, you get better people or better vendors.
Period.
Without a doubt. So it's actually harder in some ways to do something on the small scale because you got to work with the rinky-dink GCs that might run off with your money. You got to work with the cleaners that aren't as sophisticated, right? You have to work with all these people, and you have less resources in order to put into your property because it's just one single Airbnb that's barely cash flowing, most likely. Even with me with Onera, building an 8-unit property in some ways was harder, and I had worse talent working with me.
They're doing 80 units.
Or doing even Wimberley's a $22 million project, 28 keys, much higher end. And I got a world-class GC who's now my co-developer, who I don't think I'll ever do another project without him because he found $1 million in savings in that project that we were able to reallocate to better FF&E. That's like a unicorn GC situation. That like doesn't happen. But it's because I had a $22 million exciting construction project that was going to be a great portfolio piece for him. And he happens to be a good guy that's trustworthy and all the rest. I actually got introduced to him by my banker. If a banker introduces you to a GC, they're probably pretty good.
Same thing with a lawyer.
Yeah. Bigger vision, bigger opportunity, better talent.
So there's two major quotes to pull out of that. One of my favorite quotes is that the quality of the hero is directly determined by the quality of the villain. So in life, that's some general life advice too. And in business, if you want to have a $10 million business, you better be ready for $10 million problems. If you want to be a millionaire, be ready for $1 million problems. But to your point, I would also add on top of that comma, and the quality of mentor that you want is in direct proportion to the quality of problem that you're trying to solve. So if somebody is saying, how do I buy my first rental property, or how do I do my first deal, and they want that $100 million or even $10 million mentor because that's where they want to go, the problem that they're solving will not warrant the mentor because they're going to think it's too small potatoes to even reply to the DM. So that was something that I unintentionally did correct at the very beginning of my career. Was I was saying, this is my big vision. I'm nowhere near that yet, but that big vision was able to get me in rooms with people that had the same vision. And even though I wasn't at the same level as them economically, from a vision perspective, they recognized me as an equal. And that's why when I was in my mid-20s, I had so many people that were worth hundreds of millions of dollars reaching out to help me. And so that's exactly to your point. And something that somebody that's watching this or listening can take away is if they are in the beginning stages, you're not an imposter to think big. Like, you are actually going to attract a better mentor, a better legal team, a better CPA, a better GC, better contractors across the board, because there's a large economic wake there. Is there anything else that you want to add to that, or any other ways you've experienced that?
No, I think that's spot on. I will say there are steps to this, right? So
Sure.
like, I think that I had to build Onera Fredericksburg, the 8-unit site that became 12 units now, in order to cut my teeth and be able to build the $22 billion project. And now I'm working on $50 million deals, $100 million deals. I think that there are steps and levels, and it's important to your point about bigger opportunities, bigger problems as well. Thankfully, I cut my teeth and learned on a smaller project. So when I went over budget and didn't have the right GC, it wasn't like the death knell to my business. It was a
Sure.
good learning opportunity, right?
Yeah. Did you do this on your own, or did you have any like partners that had already done it before?
No, did it largely on our own. I mean, we had a architect and design firm that basically did design build for us. And they had very interesting, unique architecture and treehouse designs and whatnot. They weren't really a commercial builder, and this was like one of the bigger projects they had built. So we just didn't end up budgeting it correctly. We ended up going way over. It was also during COVID.
Shocking.
Yeah.
You went over budget on your project? What?
No, but yeah, I know. And like considerably, right? We went 50% over, I think, our final budget. So considerably over.
Yeah.
And if it was a $22 million project, that might have been it for me.
It would have put you out.
Yeah, that might have been it for me. But because it was a few $million initial project and I was really scrappy and bootstrapped it, I was able to raise some bridge debt, inject some more equity, and we were able to make it through to the finish line when we had this amazing success, high rates, high occupancy right out the gate.
Yeah, so I think that's a really important distinction that you just made, is that you guys were doing it on your own. So if you're doing it your way, I 1000% think that is the correct way. The correct path is get yourself started on something intermediate in the multifamily space or storage space. I'd say maybe go get you a 10 unit or 20 unit, something that's definitely challenging, but something that is going to stretch you, but also not put you out of the game if it goes wrong, because it will go wrong, especially on your first deal. Yeah. So how you're doing it is a great way. Another great way, which is what we recommend, there's not one that's better than the other, it's just preferential, is to partner up with somebody that has the track record. So that would be the story of you going and saying, okay, well, let's do something $10 million. And I'm going to partner up with this guy that's already done this. I'm going to maybe find the deal, operate the deal. I'm taking 15, 20% of the split. And I'm going to be the one that's like the minority partner, and I'm going to leverage their experience, leverage their mistakes so that I can, and even leverage their relationships so I can get my kind of teeth cut with a lower risk mitigation or a higher risk mitigation right there. And then the next deal, you move into a more of a majority partner. So both ways work. So you said that you did bridge debt on this one. How did you go about funding? What was the project price like?
Well, so we didn't use all bridge debt. And I just want to touch on something you just said because I think it's important. I do think that when it comes to what you were just describing, partnering up with somebody else in a project.
Mentorship.
Yeah. I'm now getting asked to do that on projects, which is amazing, right? Because I've had a success, I have a track record. So I'm getting brought in as a partner on projects where the land's already secured, they have an initial concept, there's an initial project team, and I'm getting very significant percentages of those projects.
Correct.
Because of the track record, because of the experience, to bring my GC and co-developer into it and see the thing through to the finish line and ultimately operate it and market it in a lot of ways. So yeah, it cuts both ways. If you can get to that point, then you can be that person that is then attracting somebody who's young and hungry and willing to do sweat equity to get a piece.
I do the same thing with small businesses right now. Like we have in our community, like people will come in, and right now we're in the process of closing on 2 more businesses. Fingers crossed, we should close on one in about a week, maybe 10 days.
Yeah.
And the next one we should close. I mean, it's already technically done, but we just need to get the actual location furnished and everything. But yeah, it's the same process where I came in and I'm the capital, and also I was the kind of the knowledge of it. And they were able to come in and they're going to be the operators.
Yeah.
So it's a massive macro value add play. So I guess the name of the game is, how does one establish those skill sets? What's the process of getting those initial skill sets while also mitigating that downside?
Yeah.
It's the ultimate question, $1 million question.
For sure. I mean, you asked about the debt side. I think you were asking about debt. How did we get this financed, right? So we ended up using some bridge debt, friends and family debt, and actually my short-term rental management company loaned some money to the project because it was a considerable investor in it. So that was because we went over budget. We had to go bridge debt. We actually got a traditional construction loan from a local bank. Chase, Wells Fargo, any of the big banks, it's like, good luck. They're not going to loan you money on a treehouse hotel in the Texas Hill Country, right? But I talked to 25, 30 banks. I got more than 20 no's, a few maybes, but I had one local community bank that believed in the project, believed in the market, believed in me as an operator. I got referred to him. And all you need is one, especially when it comes to the debt side. You just need one loan officer that's going to be willing to go to bat for you in loan committee. And look, we came to him with the pretty pictures. We had done the underwriting as best we could, being somewhat novices. We had a construction budget that we ended up going over, but we had one. It was detailed. We had a market study. We had some comps. I would actually say that sometimes you don't want too many comps because you might be late to the game, right? So you want some signal, but you don't want too much signal. So
Yeah.
we saw there was a couple of unique stays out in Fredericksburg and Wimberley where we did our second project, where it was like a couple's cabin doing $100,000 to $150,000 a year for a small unit. And there was run-of-the-mill cottages doing like $30,000 to $40,000 a year. But these cooler, more unique ones that were kind of tree houses or had a really amazing view with a cool pool were doing like 4 or 5x the revenue. And I was like, oh, there's something here. People are willing to pay more in this market. There's just not enough supply. So I think part of it is like identifying those supply demand opportunities.
You just gave $1 million piece of advice. What you just said is probably the most important takeaway from today's podcast. And it's just such a stupid, simple tip. And that is go to your community banks, not your big box banks. And it may take you 20 or 30 of them.
Yep. And it's just about persistence. You got to be okay with getting no's. And
doesn't mean you're an idiot. Doesn't mean your deal is bad. It just means that, seriously, it means that particular loan officer, because community and local banks and local credit unions loan off of personal preference and just gut feel. They have their little committee meetings that are once a month. That's like John, Jim, and Eric and Pam that meet once a month. And they're like, hey, I've got this guy. I've got this Ben guy. What do you think about this? You like tree houses? I fucking love tree houses.
I want to take the wife.
Yeah, let's do it. I want to take the wife there. Yeah, let's go get some Pinot Grigio and have a time. Like,
yeah. No,
so.
100%. And they want to be associated with these projects, right? Because they're in the community, people know them, and they want to be associated with the cool projects coming into the market.
So walk us through the exit process.
Yeah.
I know how it goes in business. How does it go to selling to PE for? Is this more of a business that you're selling, or is this more of a real estate deal?
So it's a hotel, right? So we're selling at a cap rate. So it's combined, right? The business and the real estate is being sold together. We didn't sell the brand. So we still own the brand, which is cool. Like we created this brand. We still own that. We still own the management. We sold the real estate and the business, the cash flow. So, I mean, look, working with an institutional investor, it took a year to get the deal done. Takes a while. There's a lot of due diligence. And the initial connection to them was through network, right? There was an incoming CFO that knew my partner at the time, and that opened up the door. Their board of directors had a mandate for the executive team to get into experiential hospitality hotels. And so they were looking at us, they were looking at short-term rentals, and they just loved what we were doing because, again, I think like they could see themselves there. It was exciting to them, and they believed that we were the right operators to keep executing. And just frankly, like the numbers were there and continued to be there as the negotiation went on. We ended up getting a better deal than we were originally talking about because the metrics were just so strong over that first year of operations.
And what was the timeline from you getting the loan and breaking ground to an exit?
Way faster than I'll probably ever do again. We closed on the loan December 2020 and we exited October of 22.
Wow.
That doesn't happen.
That doesn't happen. Yeah, I wouldn't say that. I wouldn't say that as a case study.
Yeah, it doesn't happen.
Are you comfortable sharing like ballpark profits or?
Yeah, so the institutional investor is a little sensitive about like our cost to build.
Sure.
So I'm going to stay away from that a little bit, but I can tell you that we close to 4x investor capital in 2.5, 3 years, something like that. Yeah.
So if we're taking anything away from this, I wouldn't use this as a play where you're like, oh, I'm going to come in and create an experiential stay portfolio and then sell it within 2 years for 4x. But I think that it is a great indicator of where the wake is going. And so I love Jeff Bezos's quote where he goes, don't create the wave, find the biggest wave that's beginning to form and position the surfboard. And I think that's where the best way to make millions of dollars is just positioning your surfboard. And I think this is where the surf and this is where the wave is going over the next 10 years. And I think that's a perfect example of a process in business, they call it building to sell. Mm-hmm. So you build the business not to sell the business. Actually, the worst time to sell your business is when you want to sell your business.
When you have to sell.
When you have to sell your business.
Yep.
You actually want to sell your business at the peak time where you say, this is going pretty well. I think I'm just going to hold on to this because the person that wants it the least is the one that's going to get the best deal.
100%.
You've mentioned a few other projects that you're working on now in the future. So walk us through those a little bit. So you have this 20 some odd $1 million development and a $50 million one. What's going on next?
So we actually, two main projects that I'm going to be helping lead development on that I've gotten brought in as a partner on rockstar teams, some of which I've helped put together. So one of the projects it's actually closer to a $12 million deal. So somewhat smaller, but I love the market. I love the products and I love the team.
Only 12 million. It's crazy how your perception changes.
Yeah, it really is crazy, right? I just built Onera Wimberley for 22 million. So I'm like, oh, 12 million is actually like a much easier deal to get done, raise for, all the rest. But yeah, this product is super cool and there's expansion opportunities with it. So it's a tropical landscape resort. And I don't think that the US has seen this product before. So think Costa Rica, Bali, Tulum, but stateside, 45 minutes from Miami Airport, right? So we're in the Redland Homestead region. It's the exotic fruit agritourism capital of the country. And you can grow all this crazy stuff there, right? You can grow papaya and banana trees and all the stuff you know of. You can grow cherimoya, mame sapote, longin, all these like super exotic fruit in this region. So we're going to create, we already have a 25-acre existing fruit farm. And I got brought in through a fellow content creator, actually, I would say an influencer in the hospitality space, this guy by the name of Steve Turk, who's been in luxury hospitality for 25 years in Miami. So he knows the market super well, and he knows the landowner of this 25-acre fruit farm. And so he's negotiated a land lease with her, very long-term land lease, where we can put in these like super experiential bungalow style units tucked in the jungle and then operate it for 30, 50, however many years. So this is actually, it's a longer term play, but the cash flow is phenomenal. I mean, we're looking at, if you're familiar with yield on cost, we're looking at like 20%, at least high teens, 15 to 20% yield on cost. So that's like a 15 to 20 cap that we're building to effectively.
So you're telling me that the best way to make money in Miami is exotic dancers and exotic fruits?
Maybe exotic dancers and exotic fruits. But yeah, we're playing into this jungle vibes, experiential stay. This area also right below the surface has this white coral limestone. So when you excavate a little bit and you add in some water filtration and whatnot, you can create these like crystal clear grottos and blue lagoons. So we plan to enhance the property with some of those as well.
Yeah. So, okay, you want to go pick a peach while we have a fire dancer in the background, brother? I am so sold. I'm curious. I'm trying to peg who you are in the deal as you talk, and I can't. Are you more of the visionary side of this, or are you more of the operational integrator side of this? Because for people listening, it takes two to tango. One's the chocolate, one's the peanut butter. You put them together, you make a Reese's cup. What role do you play more so in these deals?
So I would say my role can actually morph a little bit depending on the deal. I can actually do both. And I
can get that vibe.
I was both at Onera, right? I was the visionary and I was also the operator. So I have the ability to do both. And so if somebody has a very exciting vision, I can hop on board with that, help accentuate it, help put the right pieces and teammates around us to make sure it's going to be a success, help raise the capital, ultimately help operate and manage the asset. So I can do that. And I would say that this Florida project, it's Steve's project in a lot of ways, and he brought me in to help with it. But I've wanted to do this tropical landscape resort concept for years. So it's a great sort of, he's already got this thing, it's entitled, he has the land, and he can bring me in. I can insert my GC and co-developer. I can bring in my modular manufacturing partner. I know a bunch of people in Miami that want to invest in this type of product, and we can go off to the races.
Yeah. So it's all people.
Yeah.
Everything that you just mentioned was 100 who's, not one how.
Yeah, for sure. It's getting the right people on the team, right? Like I'm not a world-class construction person, right? I don't know the technical means and methods, but my GC co-developer is. He's been building houses since he was 16. He's a construction savant, right? So it's like I have to identify him and keep him inspired and incentivized. So the first couple deals we did with him, it was all fee-based, right? And he did a great job, did fantastic. But for me to retain him and him to want to invest himself in these projects and roll some fees into these projects, I'm making him a partner moving forward because he's so instrumental to the deals.
Man, I love all this. I'm fired up. Let's bring it back down to earth a little bit for the remaining half of this podcast episode and kind of talk in closing on two different avenues here. So one is if somebody has short-term rentals, if somebody is an Airbnb investor, but now they want to make that jump to commercial, they hear what you're doing, they love the glamping, they love the experiential stays. How can they leave this podcast episode and be like, I can do something with this, I can get started? What's the first step that they can take?
Start with 1 or 2 units that are just super unique, and you can build a couple stay for 2 people. So it doesn't have to be big square footage. Find an area where land is relatively cheap, but it's close to a major metro with significant disposable income, right? Folks that like will pay top dollar to stay at a super unique, super cool place. And the landscape has to be beautiful, right? Views, water features, amazing foliage, trees. You need to have some sort of natural outdoor hook, and then create a super inspiring stay. And just do it with 1 or 2 units. Document the whole process. An amazing case study to look at for this is Devin Lurup. So Devin Lurup built Pacific Bend. It's in kind of middle of nowhere, Washington, in this like amazing evergreen forest. And he created this custom, crazy container home property. And he documented the whole process. He built a 1 million person following off of just building this one container home. And now he's going to get a Netflix deal. If he wants to do a $20 million hotel, I'm sure it'd be easy for him to raise the money because he has this whole audience. And he's got a very profitable Airbnb out at Washington.
Let's talk about that. And that's the next kind of angle that I want to hit on is how to actually market and utilize social media and Instagram to grow, because what you just said is so important. When I first started my social media journey, I thought that I needed to have all of this success to demonstrate and posture to the audience that I knew what I was talking about. But now where the trend's going in social media and marketing is people don't care what you've done, they care what you're doing. So they don't really care to hear the person that says, I'm worth $20 million, I'm worth $50 million, here's all the stuff I've done, here's my Ferraris and the watches. Nobody cares about that anymore. They want to see somebody that says, like the Nature Boys guy. I'm going to go build a cabin by myself with logs that I find out in the wilderness. Come along for the journey. And so I think it's so important to document the journey. And that's what people care about, is following the process from A to B. Can you give some advice on that? Especially because this is your primary business with Awasi.
Yeah. I mean, I think you nailed it, right? Like the consumer wants to feel connected to the property, in a lot of cases, the founder. And that's why there's this massive movement towards founder-led, right? Like people connect with people.
Not brands.
Yeah, not brands. And they hate corporations, right? God forbid. So you want to be authentic, right? Show the failures as well as the successes. People connect to that. And I think that's what can really build your tribe, build your community, even months or years before you open, right? So if you document the journey, you can build this massive audience and massive list before you even open your doors.
So let's get down hyper tactical into that.
Yep.
What do you recommend? Because right now I'm seeing you've got reels, you've got carousels. Right now, me and my team, like this is a primary focus of ours. I am going from, are you familiar with Dan Martell?
Yeah.
Yeah, so I became buddies with him and he yelled at me and said, dude, everything that you are describing that you want is on the other side of a media company, not a marketing department.
100%.
And so we're making the not only financial and headcount shift, but the mental shift from saying we run a marketing department of my company, Action Academy, to now we're saying we run Sexton Media Group as the media company that funnels Action Academy. Huge mental distinction. And I think that if people think of themselves as running a media company rather than a marketing department, everything will change. So right now we're at the ground floor of like really scaling the brand up to the next level. And so we're seeing a combination of reels, like short form videos, and then Instagram carousels. So we see if you're posting like the pictures where it's maybe 5 or 6 slides and you have some audio to it, that's having the same virality and shareability as reels. Is there any particular format that you guys are using that's crushing conversion?
Well, first of all, I love that. I believe we're in a media revolution. 100% believe that. And we try to tell hotels this all the time. You can like hop on board or just get left behind. Pick one, right? There's no other option. And so we view ourselves as a media company, interestingly enough. And we happen to specialize in hotels and experiential properties.
Exactly.
Right. So it's totally aligned, see things the same way. In terms of tactically, carousels are working right now, 100%. We do carousels. That's great. I still believe that video
is king.
Video's king, right? Like that's what we focus on with our hotels and with my personal brand content. We do a lot on LinkedIn and Twitter as well, like written content, which does really well. I think LinkedIn, by the way, is such a sleeper. I know it's a little bit, and it's like getting more known, and I think more people are on there. And I totally get there's some cringe and everybody's just high-fiving on there. But at least for our business, we get such targeted traffic and lead gen from LinkedIn just from posting high quality educational content because so few people are doing it.
I know. Okay. So I'll share my limiting beliefs.
Yeah.
I've got a mindset coach that he says that you have 2 thoughts and you can't control the first, but you can control the second. And the second is, does the first thought serve me?
Yeah.
So I've got this thought. It's rooted in some reality, but I'm curious about your perspective as a stranger. My entire thing is quitting your job. Like I help high performers leave corporate America through buying businesses and commercial real estate.
Yep.
Hence the show where we just give everything away for free and we sell the implementation. I'm trying to figure out how to crack LinkedIn to where I could post content that is related to that pursuit, but also cloaked to where it's still shareable. The issue, said issue that I'm running into, is I remember being a sales rep and being on LinkedIn, and my VP team monitored everything I did. And they would see what I was liking, what I was commenting on. And if they saw anything that was, they were like, hey, are you okay? Like, why are you liking this other company's thing? What's going on?
Yeah.
So I'm trying to figure out how to build a LinkedIn strategy to where we can talk about quitting your job, where people would actually share it and not be afraid of quitting their job
Yeah, I mean,
or losing it.
do you know Darren McKee?
I don't.
Okay, so he's like social selling. He's massive on social selling.
Okay.
So I don't know if it would work for you, but for him, I mean, there's all these things he talked about that relate to leaving your job, but there's also things that he talks about that could be applicable to your job, right? So it really depends, I think, on what your angle is. I hear you though. We don't have that same issue, so I haven't really thought about it.
Brother, would you like to go please your wife with a very cool stay outside of a Marriott? Yeah, no, I love it. It's a work in progress. But so talking about documenting your pain, your struggles, your losses, what's perhaps a loss that you can share that you went through on this first project where you can demonstrate, hey, I didn't know what I was doing, messed up, overcame it, learned from it? Because I have this quote where it's just like, failure isn't a failure if you learn from it. If you learn from it, it was just a lesson.
Yeah. No, totally agree with that. So I already mentioned that hiring the wrong builder, right? So I didn't make that mistake again. My GC co-developer now gave me a cost estimate on my first project, and it was higher than who I ended up working with. And that person I ended up working with ended up coming in over what the GC that I now work with had quoted. So I learned my lesson there. You don't always want to go with like the lowest bid, right? You want to go with the
cheap's expensive.
Yeah, it is. Professional, organized, trustworthy, has a great track record. That's the GC that I want to work with. And the same holds true we were sourcing some of our structures from China, and we were working with a broker helping source that product. And it was penny wise, pound foolish, right? We thought we were saving hundreds of thousands of dollars, and it ended up costing us probably more than that in lost time because things were delayed. This is when the Suez Canal was backed up. And so our shipments got delayed months. And once the product arrived, it was lower quality. There was no instructions. I had to pay that much more local labor to retrofit what we had gotten to make it work. We had to redo all the interiors. So I probably ended up spending more money for an inferior product. So would never do that again. But it was a stage in my career where I think I was shifting from a bit of a hustler who was skimping a little penny wise, pound foolish to a true operator that could scale, that was creating an amazing product that customers would love. I was transitioning into that.
I'm working on this new framework that I'm really proud of, and I don't know what I want to call it yet, but how it goes is you go from observer to operator to owner. And so observer is you're working a job, you're doing something, you're doing what you're told. And so you're getting paid to do work. And then you go into operator, which is what I feel most entrepreneurs, like this is the trap that they fall into, is now you're doing everything. And maybe you go from generalist to specialist, but you're still like really hustling and grinding in your business. And normally the skill sets that get us here to a few $1 million won't take us there to $10 million plus, because now you have to work through other people as the last O, which is owner. And so I'm curious about your battles, or if there's any battle between operations and ownership, because I'm making that shift right now in my business. And it's quite difficult because I had to come to the realization that more work from me personally is not going to yield more results for the business. And it was a massive shift that I'm still working on.
Yeah, I think I totally see where you're going with this. And I look at it a little bit differently, but it's the same principle. And my thought is my vision now and mission is too big for me to do alone. Like my vision's gotten big enough, like I can't do it alone. So I have to identify the best partners, whether it's partners that I bring into my business, amazing hires, or if it's like partners in a real estate deal. I have to identify those people and get better and better at identifying and vetting those people and figure out how to collaborate effectively with those people. That's how I'm going to reach the big vision. So there's only so much I can do on my own. And I think that the real leverage comes into play, not just delegating and having people below you or offshore talent, maybe that's like much cheaper, that's handling a lot of the rudimentary tasks, which you do need. But I need the 20, 50, 100x employee and that person or partner, right? That's what I need a partner, which I have now, partners that like create opportunities out of thin air. And to find that person, you need to have an inspiring vision that they want to get excited about and hitch their wagon to. And you got to treat them well, right? You have to give them that carrot and that opportunity that it's worth their while to hitch with you instead of trying to do it on their own.
Yeah, every business to its natural extreme goes to processes and people. So that's what we've just witnessed in our own business ourselves. So we went from what you said, admin staff, to now like high level employees and high level partners on the business, to where each person is very competent and capable. But then what we realized is we have all these people on the bus. We have a team of 7. And then I was like, okay, cool, time to go to the next level. But nobody's clear about what lane they're actually supposed to stay in, because you go from this period of everyone's a generalist to everyone's a specialist. And so that's the messy middle that we're in right now, is saying, hey, you can't do 30 things anymore. I need you to be world-class at 2. And it's a process.
We're in the same spot in a lot of ways, right? Like we're 25 people at Awasi, but we're doing quite a number of things. Like half of those people are marketing and media, and half of those people are more ops, admin, property management, things like that, back office. So we're in the same boat right now.
Messy middle's crazy, man.
Shifting to specialists. And one of the things that I've found is quite hard, and we're figuring out how to scale it. How do we scale and hire for great creative? Like somebody that can come up with the great creative idea, where it's me and my business partner who really runs the content team can come up with an idea, send a few videos like, hey, we want to test something in this format, send it to a creator effectively, right? They can go out, run some tests, capture some of this footage, capture his vision. We can post it, see if it works. And then if it works, we can double down on it and have our professional videographers and our whole process to systematize it. So that's what we're trying to figure out right now. And man, trying to scale creative, trying to entice viral hackers and content creators to come join us. I mean, it's something that we have to figure out how to do and get really good at.
It's a $10 to $100 million problem.
Yeah.
Creative is the hardest hires that I've had. Like sales is even easier for me than creative.
Yeah.
So I laugh whenever somebody comes to me and they say, because like I've posted 1,000 videos. I've done over 1,000 videos. We're at, I think, over 250,000 on Instagram and stuff. And I think we're over 1 million total across platform. And everyone comes to me and they're like, hey, what VA can I hire that clips my podcast and that clips content for me? I'm like, you don't even know what good content looks like. Go post 100 videos before you even consider like hiring anybody else for it.
Yep.
And the Hormozis gave me a really good piece of advice, which now I share all the time so people will remember it. And that's demonstrate, document, duplicate. So they're like, learn the thing, then you have somebody else watch you do the thing, and then you let them do the thing and you give them feedback over and over again until now they completely own said thing.
Yeah. And I think there's some things that you can do to accelerate the process. So what I'm doing right now, you talked about specialists. So we're amazing on the hotel short-term video side of things, the stays and showing that off. I'm not world-class at short-form video content. I've done a lot of podcasts, so have not done a ton of short-form video content. I'm not like somebody who just picks up my phone, gabs on the selfie and posts. I just haven't done that. So we ended up working with and hiring somebody who specializes in short form video to coach me and work with me and provide some scripts. And so ultimately I'll learn much faster by working with a specialist who does that specific type of content style.
Absolutely.
Because that's the other thing too. It's like you're hiring a creative and that's great, but there's so many different types of creative and so many different components that go into content. It's what specifically do you need? Try to find the person that can do that and learn from them and hire them if possible.
Yeah, and I like having this conversation right now because if somebody's made it this far, like they're going to stick around. And this is the actual like stuff that they need to know. And I'm just going to keep doing it in every episode until they actually goes into their head that this is the stuff that helps them scale. And so I completely agree with that. So the game is, how do you not hire a bunch of people that don't know as much as you, because then you're the bottleneck at the business. Every person that you hire needs to be better than you. And that's the game, is like, how do you have every single person that gets hired be better and better so that everyone increases and the rising tide lifts all ships. So another thing I took from the Hormozis, and to this point, exactly what I do is I find out whoever's the person that is where I want to be. Like I get crystal clear about who the person is that I want to become. I go find that person. And then I ask the clarifying question of what are the differences between that person and me? And what order should we tackle them? And so I would go to Dan Martell. I go to Hormozi. And I'm looking at their media teams, and I'm friends with their media teams. I'm like, what are you doing? Like, how do you do this? And what do I need to do? And I just bring it in piece by piece. And then so what the Hormozis do is they do what's called like rising stars in their business. So they'll hire somebody that's in their mid 20s that's really hungry and they've got a lot of like energy and the core value fit. And then they hire the specialist as like an operator, like a consultant, to come in, or an agency, and then they come in to the sole purpose of training the hire. And then they basically pay for the education of the hire to then go and be fully operational.
Yep.
So that's what we're doing right now.
We do some of the same thing, right? So like these specialized consultants that I'm describing, oftentimes they're paired with somebody on our team who's full-time, who is doing a lot of the heavy lifting, and we're just paying them to consult and provide the specialization.
Perfect. Yeah.
Yep.
Same thing that we're doing. We've got Hormozy's podcast manager. We've got people that were doing the social clips for Pace Morby. So we're just like brick by brick, man.
Yeah.
So in closing, what's the total value of all the projects, all the stuff that you got going on today? Like, where are we at today with the hospitality?
Yeah. So not including the stuff that's like in pre-development, like the Florida project and the Arizona project, which together represent, call it another $100 million worth of real estate that we're in pre-development on. Like assets that we're managing, operating, it's about 70 million.
So from $70 million of hospitality assets, what's some advice that you would give in closing to you when you were buying your first piece? What is something that you would tell to that person or tell them to do differently?
So back to don't skimp, right? Try to do things the right way the first time, because you'll end up paying for it later. So I think that's a big one that I had to learn. And the faster you can get to the point of hiring that 10, 20, 50x employee, instead of trying to hustle and leverage more administrative type employees, like the faster you're going to be able to scale and create amazing value. So it's like, how fast can you move from skimping hustler to true creating amazing product and scalable operator, hiring amazing people? So I would have pushed myself. Can you move up that curve quicker?
Yeah. And my closing piece of advice to that too is it's scary as shit.
Yeah.
It's terrifying because especially like when I see that person, I'm looking at a 6-figure position and now 6-figure salaries, because I just went through a creative director that was $120,000 salary and it didn't work out. So that's the last piece of advice that I want to give to somebody that's listening to this is when you think of salaries, I used to think of it like I need to have $120,000 saved up to hire a $120,000 person. But that's not true. Like you need to have 3 months of their salary saved up. So for me, it was $30,000. And as soon as I had that $30,000 saved up, I was like, okay, cool. Now I can make this educated bet and an educated like risk on this person and take them through a 30, 60, 90. So we had a 30-day benchmark, we had a 60-day benchmark, we had a 90-day benchmark. And they didn't make it past day 45 because we were able to say, hey, this is where we're at. This is where we need you to be. And clearly on paper, they still were not making improvements. So we were able to sever the relationship. And I've gone through the entire emotional life cycle of change where I'm like, I'm a failure. I don't know what I'm doing. To now I've come all the way back to the other side and been like, that was hiring working correctly.
Yeah.
That was the process working. So
totally. And I think the one other thing I'll say, which is maybe is obvious, but go all in on content and media. It's going to help everything that you do. Right? Try to build a personal brand, put out valuable content, learn something, and then share about it, because I mean, that's where the world's going.
Absolutely. So if people want to find out more about what you're doing, they want to partner with you, they want to follow you, they want to see these freaking tree houses we're talking about, where can they go?
Yeah, so you can find me on LinkedIn, Ben Wolff, 2 Fs. Instagram, I am Ben Wolff, again, 2 Fs. And Twitter, I'm at Unique Stays Guy. I have a newsletter, follow along. Would love to connect.
Perfect. Any websites that you want us to go to as well?
Stayowasi.com, STAYOASI.com. And then our beautiful tree houses out in the hill country is stayonera.com, ONERA.
Perfect. And you guys, we will have all the links in the show description on YouTube and also on the podcast. You can go down in the show description. You can see all the places to follow him. Man, thank you so much for coming on. It's been an absolute blast.
Yeah, thanks for having me on, man.
Yeah, now next time we can do a recording once I get a new creative director in the properties.
Perfect. Yeah, I'd love to have you out there.
Perfect. This has been Ben and Brian with the Action Academy podcast signing off. Guys, if you got value from this, please share it with somebody else that you are thinking is wanting to get into experiential stays and boutique. See ya.